So we have hit 4th week of July. Coming up now, we're going to spend some time analyzing the markets, having a look at some opportunities coming up that we're going to make some good money off of. Stay tuned if you want to jump on board. So today what we're going to be covering is just talking to you about the week 4 of July that we are about to go into. So week 3, we had a really awesome week in the academy and also trading in the fund. I had some great opportunities I managed to capitalize on. Unfortunately, there were a few opportunities that I actually capitalized on and I closed out my trades way too early. The market was extremely volatile. It was some awesome trading opportunities, great opportunities on the euro, some amazing opportunities on CAD as well. And then there was an awesome opportunity on oil. And oil is going to be one of the focus points that I'm going to cover, especially focusing on trading Brent crude for the next week or 2 weeks coming up. But for starters, I just wanted to say to you, down in the description below, there should be a link to a PDF file that I'd love to actually give to you. So in MS Equities, I run a trading academy. I teach people about how to trade, invest, manage their wealth, and do exactly what I do, which is become wealthy, making money in the financial markets. So what I do every single week, I build trading plans for myself. So I analyze what's going to happen in the markets, what's going to happen with all the economic financial releases, the fundamental analytics, and then more specifically, the quantitative and technical analytics as well. I build all of this into trade ideas and then I come up with opportunities that I can trade. You know, there's a big discrepancy between what a normal trader is and what an experienced trader is. And in terms of what we focus on doing is using fundamentals, technicals, a lot of quantitative analytics. We put it in a really nice trading plan. We focus, we give ourselves some time to understand what we need to do, and then we go out there and we look for it. You know, we have to plan our targets in order to hit them properly. And that is the biggest problem that people are experiencing, is they're not planning properly. They're not aiming properly at their targets. So what we actually do to help our students out is I put this trading plan together throughout the week. Now I'm actually sitting Sunday afternoon, beautiful Sunday. And unfortunately, I'm in the office filming, but that's the sacrifice I'm going to make for you. So what we're actually doing is providing our students with these trading plans so they can actually make money with me at the same time. All of my results are transparent. They're up there for everyone to see in the markets, and same with my students. I make sure to run a clean shop, and what I'm focusing on doing is showing you that with these trading plans that you can make use of, you'd at least be able to come up with some ideas of your own that you probably are going to do very well with. But you know, every single week, sometimes being able to have a look at what someone else is doing can help give you some guidance into other trade ideas, or say, for example, some of our trade ideas coming out can work very well. So it's not necessarily, you know, one of those simple newsletters, one of those easy to go sort of read and digest profiles that you can find on the market. This is a really, really powerful piece of information. We send one out every single week. And now it's going to be followed by a video coming out every Sunday afternoon. Hold thumbs. Hopefully we'll be able to get one out every single weekend. But what it's going to be doing is briefing you on the week, showing you exactly what you need to start covering that is going to help you a lot. So what I'm going to do is give away access to the next 25 people that email me. So basically all you need to do is click on my email down below. You need to send me an email saying, I watched your video on YouTube and I'd love to gain access. If I do have one of the 25 seats left, I am going to give you free access to this email for as long as you want. So what we're going to be doing is sending you out the PDF file, a few other trading plans that we come up with every single week, and also on a long-term basis. And there's going to be a few other awesome things we're going to throw in for you. So to everyone else, you can download the link below and you can actually give reference to the PDF file that we're going to be viewing and we're going to be having a look through. But for starters, what I'm going to do is give a simple run through. I'm not going to dive into this too much, or else it's going to be a 2 or 3 hour long video. Everyone's going to get bored as hell and they're probably going to shut off the video. So what I'm going to do is make this short, impactful, and hopefully you can get some information from this that can help you out. So I'm not going to read through it, because I'm not like my school teachers that taught me back in the day, I'm actually going to give you some information that is not in the trading plan. So I'm going to read outside of the trading plan. What you need to do is download the plan, have a look at it by yourself, and see if there's anything that you can pull from it, some good ideas as well. So let's get to it. So finally, I've managed to get everything going. Basically, some of the ideas we're going to have a look at is just to run through, I think it's 3 or 4 trade ideas. We're going to have a look at the economic outlook for the Euro news, the US news, and the British news, and then a few other pieces that I think are going to make you some money this week. And then I'm going to end it off with some news on some oil trades, some OPEC stuff, pretty crazy information I actually found. You know, I'm going to take a big swing at it next week, and hopefully it's going to go well. So make sure to stay tuned. We're going to wrap this up fast, and then you guys can get back to making some money. So let's get to it. So for the first trade opportunity that I was having a look at, the ZAR US dollar is ranging between 2 amazing ranges right now. It's sort of testing that upper limit of the first resistance area right now, and I think there's going to be a pretty good pullback. Technically speaking, the trade looks really good. Fundamentally speaking, obviously there is some information coming out next week. Some information I listed in the PDF file, but make sure to have a look through that. Like I said to you, it's moving from 1209, and it's spent a few weeks moving up towards the 1260 region. And as you can see in the past, this 1260 region has been tested very often. So it's been tested as a resistance level, as a support level quite a few times. I think if you're able to enter quite close to that level, or on a test of that level, perhaps if there might be even a wick that spikes a level on the daily charts, maybe try and see if you can enter on a sell order, try and hold it back down to the bottom. Try to see if you can gain some space with that. I think it could be a good difference maker if you're able to gain a really good selling candle on that return. So depending on your strategies that you use, as for my students, you know what to do. We have always taught you exactly how to do things properly. But in terms of what you need to have a look at is on those charts, having a look at how it's moving through range 1, it's starting to move back towards that second range, but a test of that resistance of range 1 is going to be probably happening quite soon, maybe within the next day or two, so Monday, Tuesday, maybe Wednesday. Have a look to see if you can find a turning candle, a single candle, and try and enter in on that. Like I said, fundamentals, I listed it. Have a look, see what you think. So coming up with the second idea, Aussie dollar CAD has been showing some great technical based trading in the past. So the Canadian dollar has been working really well for me in the past, sort of 2 to 4 weeks. I've been seeing that technical based trading patterns have been relying on support and resistance levels really strongly. You know, the market moves with direction, it moves with intent properly. And obviously with such volatility and such sensitivity in the oil markets right now, given all the problems that OPEC is experiencing, a lot of countries are having to cut production, which is impacting their economies a huge amount. And further to that, having a look at the US economy right now, you know, there has been a few points that have come out on the fundamentals that have put a few opportunities on the tipping point for the Canadian dollar. So having a look at what is causing bounce back effects on the Canadian dollar is probably causing a lot of volatility. You need to keep a close eye on some of that information. So the US markets and the oil markets, it impacts the Canadian dollar a huge amount. And that's, I think, why you're seeing very strong movements. You're seeing steep sell-offs, you're seeing steep bullish moves. And this is actually really good because the second you're seeing those signal points to enter, your trade's moving and it's going properly. You know, I've spoken quite a lot in my previous plans about trading the Japanese markets. I trade the Japanese markets a huge amount, and I've struggled hugely to find those trigger points. I'm currently struggling massively on a position where my trigger points were just not hit properly. And you know, it's a massive risk exposure issue where I've got trades sitting in the market. They're not going the way I wanted, but with the Canadian dollar, it's working well. So what I did is I showed you some information, put a nice chart there talking about exactly how it's testing a downward trend resistance area, and it's sort of moving back to that 0.97804 region, and it's a really nice support region. Historically on the daily chart, this level has been tested really well. It's been tested properly in the past. So having a look at that downward trend support line, it is past the signal area. You know, the previous candle shown on Friday was really bearish. The market slid heavily. And this was amidst some news with OPEC actually rising production even though they said that they wanted production cuts to occur until March 2018, they are actually now already starting to move with certain areas, rising production, which has caused people to really get scared in the markets. But we're going to talk about that just now on the oil trades and Brent crude. But it is post signal point. So obviously you have lost some pips out. If you are in the trade, try and see if you can hold it down to that 1.978 region. But see if you might want to enter. I'm obviously going to see if there's another opportunity. Maybe there's going to be a slight intraday retracement on Monday if the markets open out a little stronger. And I'm going to try and see if I can find a way into this trade and try and hold it back down to that support level. If I miss that, I'm going to wait till it hits that support level, try and see if I can capitalize on a buy order, hitting a bounce on a retracement, or even if it's a dead cat bounce, I'm still going to try and see if I can scrape some pips out of that trade, because I did alert this trade to some of my students, but stupidly I didn't even go for the trade. I was too busy on some other positions. So focus on that. Have a look at the fundamentals I talked about in the PDF file. I'm sure it's going to help you out quite a bit. So having a look at one of the last trading opportunities that I posted out, this is actually a post-trade opportunity. So last week I alerted out NZ dollar CAD out to my students in the previous weekly trade plan, and quite a few of them jumped on board. They're doing quite well with their position. As you can see in this position, there was a retest of a support area, and the market has really turned heavily and moving straight back up on the daily chart. So there was some perfect buying candle wicks that were sort of testing right back down in that support line and pulled straight back up. Now, in some of the information I posted out on the trading plan, I talked a lot about the fundamentals, what is going to affect the NZ dollar, what's going to affect Canadian dollar. There was some big releases coming out last week on the Canadian dollar, and we managed to call them really well. But that's the thing, is you need to focus very carefully on understanding the fundamentals. You know, you need to look back in the past, see what the market is doing, and see what the macro outlook of the market is going to actually be. You know, where are these economies moving to? Why are they moving? And exactly what is happening? But still, a big one is, don't try and be a rocket scientist about it. You know, if it's still a technical based trading strategy, it's testing a support line and you're going to catch it for a retracement or even a dead cat bounce, and you're just trying to scalp in a few pips, you can still make that happen. So you don't have to be too crazy about your analytics, but once again, if you could have caught that dead cat bounce, it's going to go very well for you. As you can see, it's got some bullish candles on it, it's got some legs on it, and I think it could still move up to that red area. That area is in the 0.94650 region. I'll actually put that I'll put that number out on the chart, but you can see that region. I think target price is going to be around that region. Obviously, this is up to you. If you're in this trade or if you're looking to see a retracement back for a dead cat bounce, you're going to try and short that. You can also look at that as well, but I'm going to try and see if I can either look for a retracement, a slight retracement, and a move back up to that area. I think it's going to be moving into that area right now. The New Zealand dollar is doing right now. Last week there were some numbers coming out in the QE that was sort of less than expected. It shook up the market a little bit. On some of my Japanese yen trades against the New Zealand dollar, some people know that I'm in some of those trades. I managed to do very well on that. So focus on that. Also focus on the Canadian numbers coming out this week. I managed to put some information down below. It's going to be a very quiet week coming out. The numbers I've just put up now, you can see there's very little coming out on the New Zealand dollar and the CAD. Coming in Monday, we've got the wholesales month-on-month numbers coming out. Wednesday, we've got 4 releases coming out in the New Zealand dollar. You're looking at the trade balance month-on-month and year-on-year. You're looking at export numbers and import numbers as well. So obviously your import-export industry in New Zealand is going to see some movements depending on what the numbers come out as. But once again, make sure to have a look at the gross domestic product coming out on Friday on the Canadian dollar, but then more specifically watch the oil price very closely. And that's what I'm going to cover right now for you. I actually completely forgot. I'm going to leave the oil trade to the last piece for you. What I'm quickly going to do is just jump through the British market. Releases coming out this week. If any of you are in the British market right now on any positions or currencies or commodities, make sure to have a look at this. So next week coming out, we've only got 3 releases on Wednesday and 1 release on Friday coming out. So in terms of that, the inflation report hearing coming out on Wednesday, I think it's going to be very interesting to see what they have to say, especially sort of Brexit being in the way right now. And there's quite a few other things. Draghi's expression on Thursday last week for the ECB reporting came out sort of quite dovish, but very optimistic of the long-term future. And that caused some massive impacts to the euro. The euro recovered massively, and that was really, really good to see. So in terms of what the knock-on effect of Britain is going to be, obviously, given the fact that they are still benefiting from certain moves in the Eurozone, and in terms of what they might be looking at, you know, on the long-term plan as well. I know there's a lot of countries, a lot of Feds that are looking at tapering their books right now. So obviously looking into that, seeing what Britain is looking at doing with their interest rates as well is going to be important. But this is going to be a big outlook because this is going to set the tone for the next 6 months of the year. You know, we've just finished off the first month of semester 2 of the year, I should call it. So the last 6 months of the year, month number 7 is going to set sort of the tone for what are we going to look at for the next quarter coming out, quarter 3, and then moving into quarter 4, what are we going to do? So you're going to find a lot of people in these committees are going to sort of try and see if they can fix up anything that might have gone wrong and try to get a good grounding going into 2018 for the economy. Focusing on that inflation report is going to be important. Gross domestic product year on year is going to be something important. It's going to be impactful. But obviously, if you see that something is coming out on a really extreme level, so numbers are really, really extreme, that could be a good intraday trade for you. So intraday trading opportunities in the gross domestic product number could be a good opportunity. But further to that, keep it safe, trade cleverly, and make sure you don't get burnt or caught out. And then on Friday coming out is the Greek consumer confidence. I've never really worked on that, so that's just going to be up to you to have a look at. So we've got some big stuff coming out on the US markets. So starting off the crude oil stock exchange, obviously that's going to be a massive release coming out. I'm going to tell you exactly why now. But coupled with some of the big meetings coming out and obviously some of the news, it's going to be quite big to have a look at. It's going to set a serious tone for the rest of the week, depending on what is decided and what's announced as well. In terms of the Fed's monetary policy statement, please make sure to have a look at that, see what the outlook is going to be, you know, hawkish outlook, dovish outlook. That's going to be very important to set the tone for any positions you have running right now. Obviously, intraday trading, it's going to be a big volatile opportunity going into the last week of the month. You know, last week was plentiful trade opportunities. The market was looking really good for me. And I think that you're also going to find some interesting ideas coming out on their policy statements for this week. Going into the Fed's interest rate decision as well, that needs to be followed closely because the past 5 interest rate decisions, they've raised interest rates 3 times. So I think that coming up this interest rate decision, I have a funny suspicion that they might keep the interest rates unchanged, but I do think that coming into next week, they might change interest rates. They might give it an extra hike. Look, that is what I feel. Once again, I'm not going to ever say that what I say is the right thing to do. I'm doing this purely for educational purposes, trying to get that mind juice running and trying to see if you're able to come up with some awesome ideas. You know, I'm not trying to get you to follow along with what I'm trying to do. Purely just for interest's sake, I really feel that coming into this week, they might leave interest rates unchanged. Next week, they might hike it again if they feel it needs to be moved. But obviously, going into the week, having a look at the policy statement, what they're going to come out with is going to give us a good decision on it. Going into the rest of the week, initial jobless claims are coming out as well. So initial jobless claims are going to be very important to follow. Gross domestic product annualized is going to be great to have a look at, and also the Baker Hughes US oil rig count. Baker Hughes US oil rig count last week slumped by 1 rig. Down to the number of, let me see, I think it was a number of about 746 rigs. I'll have a look at the number again. But that's also going to be very important because in terms of their numbers coming out, that's going to sort of set the tone for the next week as well. But I'm going to have a chat with you about the oil rigs as well. That is going to be important to have a look at. So you can see if I scroll down here, obviously please have a look in the PDF file. I'm not going to try and read it out for you. And what I'm going to do is just quickly cover the euro markets. So Going down here into the euro markets, obviously you can see the ECB news release coming out. It was great to watch. I mean, that move on the euro US dollar was awesome. It was really, really powerful to see someone sort of causing such a major move in the markets. And I really feel that their outlook on what they're trying to do, on what they're doing with their policies, and obviously what Draghi feels is going to be a great idea for the future. And also, you know, for long term, in terms of where the Eurozone is going without Britain as well, and, you know, everything else that's happening in Europe. There's been some tough things happening in Europe over the past couple of months. You know, I feel sorry for him, but he's done well to keep his composure. He's done well to calm the markets, but still make his point clear. And I think a lot of us are seeing through that storm and seeing where the money is going to be moving to. So I was very happy with what came out with that. But coming into week 4, you're going to see there's not too much coming out. Just having a look now, you've got some stuff coming out in the German markets. There are a few things coming up in the European money. There are a few things coming out in the European Monetary Union as well. The consumer price index year on year for the German markets is coming out. So if you're in anything in German markets on the DAX, focus on that very carefully. And then lastly, it is going to be important to have a look at the market manufacturing PMI for Germany and for France as well. So focus on that. Obviously, have a look at what I've put in the PDF file. Try not to read through it too much, but not doing too well on that. And then further down, you can just see what I've basically done is I've added in the economic calendar of all the medium and high impact events for the rest of the week. And I've basically put in all of my personal comments about what I think is going to happen, what I feel is going to be a good incentive for the markets to do, and where we should be going in terms of some of the positions that you should have a look at. So obviously this is nice because I've highlighted some points that I feel you should pinpoint and what you should look out for. So in terms of that, for study sake purposes, it's going to be awesome to follow something like this, but also in terms of monitoring your current positions, hopefully I can give you some information that might help you out, that might give you a bit of an insight to a few other ideas that are going to help you out with the market this week. Now, what you've finally been waiting for, we're going to talk about the elephant in the room, OPEC. This is going to be something that obviously everyone has got split opinions on. Look, just to give you some background, I am a trader, I am an investor. For myself, I do quite well, and for my clients, I do pretty good as well. But in terms of my outlook on the markets, I've traded oil for a long time, and I feel I know enough. But once again, the market proves us wrong so many times. So the things I'm going to be covering is what I feel might happen to the markets. But once again, I've been burnt over the past 3 months, not badly, but I have been burnt a few times by some of the oil fundamental releases coming out, and quite a few of my other colleagues have been hit quite badly as well. It was as an example when the market was sort of pushing that $55, $56 region back about 2 or 3 months ago, and the crude oil stock change releases came out, and it was way down. I mean, the numbers that came out, we had no idea it was going to be so low. And next thing, the market just falls through the floor. And obviously, everyone was stacking up buy orders on the market, expecting it to push that $60 region. And believe me, it was painful. It was bloody on the way down. But basically what I did is I cut my trades, entered on sell orders. I rode that one all the way back down to $50 a barrel. Cut up my trades, saw that there was a retracement coming in, and then re-shorted it again back down to $44 a barrel, re-entered 44, rode it back up, and unfortunately closed out really early at about 45.10. But what I'm basically going to be focusing on is I've ridden this back down from a $50 a barrel retest, which I mentioned in July week 3's economic trading plan. I basically made it clear. I said, from what I understand, you're going to see oil trading between $45 and $55 a barrel. And I really feel that this week coming up, it's going to be testing that $50 region. So I entered on some orders. I tried to hold into the area of $50 a barrel. Managed to close them out quite early, unfortunately, but I did also re-short my position at about $49.50, and I hold that back down. But in terms of what I did get wrong, which I feel is an error on my part, point taken, you know, I'm not bulletproof, I do make errors as well, is I actually entered on buy orders as well. So what I effectively did is I entered on quite a hefty sell order on the oil position that I was trading. This is Brent crude, just to make clear. I don't trade US crude, I prefer trading Brent, but basically entered on a sell order early Friday morning and had no idea what was going to hit the market. So I closed out the position early, but unfortunately I was also in some buy orders sitting at about $49.90 per barrel. And those buy orders are still there. Luckily, they are pretty small positions, so I'm really not too worried about leaving them there for a while, trying to see if the market is going to push back into that region. But obviously, I'm not happy with it. I really don't like having a portfolio that's in a drawdown. But effectively, what happened was OPEC came out with some news basically saying that they're going to rise production. And, you know, I really sort of got confused because, you know, all of the meetings that they've been having with so many OPEC members, even non-OPEC members, you know, even though Libya and Nigeria is exempt from the cuts that they were talking about, they've still pushed them and said, please keep cutting production, see if you can actually sort of move in any direction that's going to help us a bit. But, you know, for these countries, they rely on their oil price, they rely on their oil production to make it through every month. A country like Nigeria is not going to do very well if they're going to be cutting production. You know, it's going to hit their bottom line badly, and it's going to affect the economy heavily. But in terms of other people that they've been looking into, you know, I felt that it was a good approach, what they were trying to do, extending out to a few of the other countries and what they scheduled. But, you know, for them to be openly asking the market to do this, and then they're starting to rise production for July, it really didn't make sense. So even though the numbers have been coming down, they have been tapering really well, and you know, we have been seeing a really good push to $55 a barrel. It stalled out at 50, hit that whole number resistance area, which is a technical barrier, and just pulled straight back. So the market slanted heavily, and a big reason why you saw this happening on Friday is that a lot of the big money managers that they've been watching have been loading up a 3-week long buy wager where they've just been adding contracts and options to their basket as much as they possibly can for 3 weeks straight. And right now we're actually sitting at the most buy orders since April, from what I know. And let me just have a look here. And from what I've seen from some of the routers news coming out, so this is on the routers website directly, money managers have said to have raised their net positions to nearly 36,000 contracts this week. So the week of the 18th, which was week number 3 that we went into, and the hedge funds and money managers continue their 3-week buy spike, where it's pushing now the highest buy spike since April and the lowest number of shorts since June, the beginning of June. So obviously what we're seeing is the industry is starting to realize that being bullish oil is going to be a better idea. But then, you know, what's coming out in the economic releases is really not making sense. And, you know, even some of the massive Saudi oil holders are, you know, saying, we stood behind you. We did our production cuts. It's been impacting our bottom line. And they sort of going out there, you know, saying one thing but doing another. And this is confusing the market. And what you're seeing is the market is delicate right now. So what I think actually happened on Friday is a lot of people were net long on oil, and the second this news came out, they noticed that whole number resistance at $50, and a lot of them took their money out the market, and that just caused a massive slide in the market. So this bearish slide, I managed to capitalize on a small amount of it, but I was also net long. So I was net short, but I was also net long, and that was dangerous for me. So I managed to close out my shorts, and what I'm basically having a look at is seeing if coming into this week there can be some opportunities. But now what a big opportunity is going to be is actually coming up in about, I think it's 10 to 12 hours. OPEC is going to be meeting with Russia in St. Petersburg, and they're actually going to be talking about extending production cuts. From what I understand, there are going to be a few other OPEC and non-OPEC members there talking about it. So obviously this is going to set a massive tone for the rest of the week and probably going into next month. And I think a big thing that is going to be raised, the serious elephant in the room, is going to be exactly why they raised production for July, and also looking into, you know, why exactly are we putting the price back down? What are we going to be doing? You know, massive money managers are going net long, but the market is really not liking it. So obviously they're working around those numbers. They're trying to digest something that the market's going to like and that all of us are going to like as well. But my opportunity that I'm going to be having a look at is seeing if I can see a retracement back down to that upward trend support line and see if I can enter on any buy opportunities, or if I can possibly short it back down to that support area. Those are obviously going to be good opportunities, but the problem is the volatility of the market is making it tough for us to trade. And I think that is something that we also need to focus on, is, you know, trying to realize that sometimes we can't see through the gray areas, and that's where we're going to be caught out. So for some of you, maybe waiting for the dust to settle, seeing if you can enter later on. But in terms of the volatility, you know, I still have a good feeling that we're going to be ranging between that lower $45 to $50 barrel and that second range going between $50 and $55. You know, I think we're going to be trading between those ranges at least till late November, maybe October, and then we might see a breakout in some period. I really hope it's to the upside. You know, if we're breaking below $45 a barrel, we're going into uncharted territory that you know, scared us off so badly. But that's the other one, is also there's some big information coming out in April of 2018. You know, there are some big IPOs coming out in Saudi oil companies. There's also some serious movements being made on US oil fields by Saudi Arabic companies as well. And you're seeing a lot of control being shifted around. The sanctions that they're talking about implementing on Venezuela is going to be massive. That's going to be really tough for Venezuela to work on, because in terms of what they currently owe right now, they owe about $5 billion in debt. A massive portion of that debt coming from one of their oil giant companies, which is a government-owned entity. And also in terms of now their production cuts, they're going to struggle to sell off that oil. And whoever's going to be taking it is going to be taking it at a cheap price. So that's going to put a lot of pressure on the Venezuelan market. You know, I think this could cause for a massively squeezed economy. It's going to cause for some serious issues, and you know, that's going to be a massive focus point as well, is to see how they approach it, because, you know, I understand why they're doing it, and the Trump administration has mentioned that possibly putting sanctions on certain members of the Venezuelan government might be better than putting a sanction on the entire government, because that's going to have a massive knock-on effect on the people. And you know, in a country like Venezuela, that could actually turn it into a humanitarian problem, which I think is going to be very, very dangerous to approach. You know, that's something you don't want, where big business and manipulation has actually damaged the people of the country. So seeing how they approach that as well is going to be important. I think also the other one is to see if Russia is going to actually help them out, extend some production cuts, and also see what that might do. But I think it's going to be important to use oil for week 4 as sort of as a crowd settler or a volatility maker, depending on what the outlook is. Focus mainly on that. Try and have a look at the Canadian markets if you can come up with some opportunities. And once again, have a look at the information on ZAR US dollar. I think technically you could come up with some good opportunities. So once again, everyone, like I said, hopefully you are still watching at the end of this video, and you are going to want to subscribe to our trading plans. If you're one of the 25, well then awesome stuff. I really hope you're going to do well, making lots of money off of it. If you're not going to be one of the 25, you can still drop us an email, have a chat with us. If you'd like to come on board with the Academy, if you want to work with us, train with us, Once again, we train around the world. We train students from over 25 different countries. I have a fully online learner management system platform, and I train students from around the world to help teach them what we do. So you're more than welcome to come on board with us as well. We offer an amazing cashback program as well with our brokerage, BD Swiss. What they're doing is they providing a very comparable opportunity for you to be paid back the cost of your course while you trade with them and while you study with us. So if you're interested in getting in contact with us with that awesome stuff, we're going to help you out. But once again, hope you enjoyed some of this information. Look, I do know this is opinion based. You know, I'm not going to call this information that you should just jump into and trade all the time. And once again, you did see the disclaimer. It is important information that, you know, if you capitalize on this the wrong way, you're going to lose money, and I'm not going to live with myself with that. So please make sure to approach it carefully, trade safe, trade hard in the markets this week, and I hope you have an awesome week of making money. Cheers for now, everyone.